After a succession of downbeat reports on housing and the GDP, many people are concerned that America's fragile economy is on the brink of a double-dip recession. Joining us now is our chief business correspondent, Ali Velshi. Welcome back to Ali. It's been a while since we've seen him. And as well, Yale University economist Robert Shiller. Good morning to both of you.
Morning, John.
Robert, you were one of the first to predict the housing bubble, so you got a pretty good track record on all of this. You are now saying we may be on the edge of a double-dip recession. What do you think the likelihood is, and what's leading you in that direction?
Well, I think that my concern is that we won't heal before the next recession. The unemployment rate is stuck at a high level, and now we're seeing some signs of weakening. I don't know exactly what's going to happen. No one knows, but I worry that we'll just be in another bad situation shortly.
Ali, what's your reading of the tea leaves out there?
I think that's exactly right. I think the double dip doesn't make sense because usually a recession, you go down and then you go up, and if it's a double dip, which we've never had in the United States, you go down again. In this case, we haven't taken that leg up properly, so what we might just be seeing is a very, very slow recovery. Look, markets are not terrible. Home prices, and I know this is a delicate area getting in here with Robert, who knows much more about this than I do. Home prices are actually a smidgen higher than they were a year ago. That probably won't last. The issue is jobs. If our unemployment rate were 4.5% or 5%, we wouldn't be having this discussion. On Friday, we're going to get the mother of all reports, the jobs report, and we will once again have lost more jobs. Yeah,
Robert, you mentioned unemployment as well. And when you look at all of these numbers, like the trade imbalance, GDP, housing, is that all kind of irrelevant when you've got that 9.5% unemployment number staring at you in the face?
Yeah, I think that we haven't focused enough on jobs. I mean, congressmen tell me they're getting letters from people saying, we want jobs. But the economic theory has been, the jobs will come later. Jobs are a lagging indicator. Just get the economy going. But that hasn't been working.
So how do you get the jobs back again? What would you suggest?
Well, I think we have to. I have two basic ideas. One is to go back to a kind of New Deal programs of hiring unemployed in temporary jobs. And the other thing, I believe, is we need to help the state and local governments hire back people because they have a budget crunch and they can't borrow like the federal government can. So we need revenue sharing with the state and local governments.
So, Ali, it sounded like you let it yet another stimulus package, a second, yes, or maybe a third or fourth, depending on how you parse out everything that's happened in the last 2 years?
And there's no political appetite for that whatsoever, although it may be necessary. Japan has put more money into the economy just this morning. The reality is, Robert makes a very good point. We may not have a double-dip recession on the books, but cities and states have been broke for a while, and it's getting worse for them. So the issue here, there's one thing that's different, John, than it was when you and I used to talk about this every day in 2007 and 2008. There is money. People are saving money. We have a savings rate of about 6%. Big companies have money. Just nobody wants to put their foot in the water until they see someone else either hiring or spending. So it's a bit of a confidence game right now. A little more help by the government strategically placed may actually do the job.
Robert, in past recessions, the housing market, pickup in the housing market has helped to lift us out of recession. When you look at what's going on in the housing market now, is that calculation out the window, and does something else have to lift us out?
Yeah. We really don't know what's going to happen. We just ended the first-time home buyer, an existing home buyer tax credit. Sales plummeted. We saw the most striking drop in existing home sales last month ever. And we just don't know. Is this the beginning of another downswing or not? Or will the government come back in and help again? It's really uncertain right now.
And another point, Ali, that a lot of people are raising is this going to be, for the United States, a lost decade similar to what Japan suffered between 1991 and 2000?
I actually think that's possibly a bigger concern. In fact, a lot of people worry about inflation, but the fact that prices don't move anywhere and demand doesn't increase and interest rates don't go lower, and you've got 4.5% or less for a 30-year fixed mortgage, and people still aren't buying houses at depressed prices, that's a possibly bigger concern. But I don't actually think that's entirely real either. I think we've got to get through this tough patch, and we've probably pushed the recovery back, and it's probably going to be flatter than we expected it to be. The best part of a recession, as you know, John, is that it's supposed to be fun on the way up. Prices go up, you get a job.
Yeah, where's the fun? Yeah,
there's no fun here.
Robert, what do you think about this idea of a lost decade?
Japan had 2 lost decades.
Yeah.
So I think it's a worry. But let's also put it in perspective. Japan has not been in a depression. Japan, for the last 20 years, has had GDP growth, low. There's just kind of a loss of excitement and opportunity. People in Japan feel like it hasn't worked out as they hoped. And I do think that it's a worry for the U.S. Something, maybe not 20 years, maybe 5 years of slow growth is a possibility. But don't get alarmed. It's not the end of the world. And if we get jobs back, if we have jobs bills that protect people, it won't be so bad.
Well, we're certainly looking forward to the fun whenever that happens. Ali Velshi, Robert Shiller, great to talk to you this morning. Thanks so much.